Alright guys, what is good? Welcome back to another video. This one is going to be very important, and if you clicked on this video to learn how to not get chopped up in accumulation, then you are actually in the right place. I know that you are just like me. You want to learn, you want to get better at trading, you want to improve your psychology, and in turn you also want to not get stuck in some chop, right? You want to get good, clean trades in the actual direction, and just being able to identify chop will bring you a super long way. And if you watch this whole video, I am pretty sure I can provide you with some things to deal with that. So, all right, guys. So now I want to get you set up with kind of accumulation, and so you can understand what it is, right? So accumulation, right? This is sort of what it looks like. I kind of just spam lines, but this is actually super accurate, right? Super accurate. Now, what this really means is the amount of buyers is pretty equal to the amount of sellers. Now, this is kind of in terms of interest. So there's really no interest to go higher, and there's no interest to go lower. They're kind of just happy at the price they're at. It just bounces back and forth. Now, you do not want to be caught in this range because obviously you are a trader. You're probably not trading some, I don't really know if there's a way to trade accumulation, like just in terms of it not moving in price. I think there's some shit you can do with options, but fuck all that. We're talking about actually getting a direction, bullish or bearish. But if you're taking this, let's just say that you go into the market, we have a trend, but you see this, right? Now, this could be a high and then a lower high, and then it could possibly be a higher high. Now, if that's your idea, right? This is your idea. You need to have, you actually need to have narrative, right? This alone can make you tons of money. But if we are in a kind of area that we want to chop up, accumulate, obviously you're never going to see through on that trade. And what this can do is cause you to gamble, pretty much. This can cause you to blow accounts. You can force trades. You can make something that really isn't even there. You can take setups in here, like because you lost a trade. You want to make it back. It looks like we might go higher now. Oh my God, we're going higher. Nope, we're accumulating again. Now, understanding what accumulation is, where it might be, and how you can avoid it will prevent you from actually taking this trade in the first place. So let's get right into that. All right, guys. So now we're on the charts. We're on the NASDAQ. It's from a couple days ago, but I think it is a pretty good example. This is at a market open, and then we kind of chop around. Now, people can get so lost in this chop, it's actually insane. So first of all, let's look at market open, right? First of all, the first thing we do is take some highs and then dump. So now we kind of have an idea, right? Start off here. Now we kind of have an idea. We're going lower, right? Clearly we're going lower, but are we going to continue going lower, right? Now, this is something you need to take to the higher time frames. And if you're trading the 1 minute, I'm sure a lot of you are trading the 1 minute, but you need to go to the higher time frames. So that would be the 5, that would be the 15, that could even be the hourly. So right now I'm on the 5, and as you can see on the 5, there is more narrative to be seen here. Now, zoom out, right? What are we actually doing here? We are actually moving up, and then we're getting a retrace down into this area, right? We are literally doing this. Again, with some chop right here. You know, we did kind of chop in the overnight session, but we are actually just retracing. Now, this is actually extremely important on what you need to look at. You actually need to look at the higher time frame every time. What direction are we going in the higher time frame, right? Now, we are retracing this gap, and we are selling off pretty hard in a very volatile time, right? New York open. So could we see lower? Yes. Could we see higher? Yes. Now, your bias should always be pretty based off of current price action. So I'm still kind of bearish, even though we are in this gap. I'm not going to instantly switch my bias, right? Let's go back to the 1 minute and play out some more candles, right? So now back on the 1 minute, right? We are clearly bearish, but we are still in this gap. So now I do kind of not know, right? Like, I don't really know if we're going to go lower. I don't really know if we're going to go higher. And this is a very important time to understand where your bias should be here, right? Your bias in the market will pretty much determine what you're going to take, right? Obviously, you have to have a sort of a bias on where we're going to go. Otherwise, you're not taking that trade. Now, bias kind of just has a like kind of perfect level it can be at in your trading, right? You can't have your bias taking over too much of your actions, and you can't let your actions take over too much of your bias, because obviously in the higher time frame, I need to have a bias here, right? Like we're in a gap. We could go higher, we could go lower, but on the lower time frame and what's happening right now, we are going lower. So this is a time where you need to loosen up your bias. And actually, you really should have your bias loosened up always, right? Have a bias, but do not let it show you something that isn't there, right? Because we are going to get moves in the market that might invalidate your bias. And if you do not change your bias when we clearly invalidate your bias, then you are doing something wrong. We will stop you out. It will continue moving in a different direction. You're going to force trades, and you're going to have very bad psychology, right? So right now, just understand that you need to loosen up your bias. So I'm looking at this right now. We're clearly in a downtrend, and I don't know where price is going to go, but I want to see us lower. So play out more candles, and what do we see? First of all, bad sign. We're getting chop on the 1 minute. Now, another very important thing to look at is volume. Just look at volume. You need to see volume. Volume is super important because we're getting more volume to the downside than we are to the upside. Then we can assume that we're probably going to hold to the downside a little bit better, right? So when I see this on the 1 minute, at least on the 1 minute, right? We're going to look at the 5 minute in a second too. But when I see this on the 1 minute, look at the size of the bearish candles we put in, right? 15 points, 19 points. This one's pretty good, 25 points. But the ones before this, right? Very tiny candles, 8 points, 17 points, whatever, right? But now we get these nice closing bullish candles to the upside. So now I really don't know where we want to do what we want to do on the lower time frame, right? I don't know what we want to do. So right here, my bias is gone. Now, like I don't really have a bias because we could be flipping to the upside. Now I don't really want to take a trade. Now, this is super important. You actually need to be, shout out Justin Werlein, but you need to be reacting to the market in these types of conditions. You need to be reacting to what we are doing on the chart, because clearly if we invalidate these gaps, right, close through them with a big bearish candle, then shorts might be good. They might be good, even though we are kind of in this area. Shorts might be a little bit more viable. Now, I don't even think I would take them. I don't think I would take shorts here just because, like, what targets do we have? We have nothing. So, right, I don't really think I would take shorts. Now, this is where I kind of let stuff play out, because people are going to take bad trades here. Now, here's where we're going to go to the 5 minute. What I'm looking at in the 5 minute to determine when we are changing a trend, right, is going to be break of structure or market structure shift, right? So I'm looking at the volume. I'm keeping my bias loose, right? And I'm looking for high time frame break of structure, or 5 minute, 15 minute, whatever you use. Just go a step higher and wait for a break of structure for an actual trend shift. Now, I want to take a look at this high right here, this wick right here. We actually do close above it. So here, you could have an idea that we might move higher because we don't really have targets below. We have nice bullish candles, right? Good volume, right? 100 points to the upside. That's pretty good. What you need to be watching now is reactions. You need to be watching reactions. So here is kind of what I saw first, right? We sold off a 50-point candle. That's pretty good volume to the downside, and actually more than any of these candles here alone. So we're actually selling off more than we're buying up right now, even though we are retracing. So, but yeah, even though we did invalidate this retrace pretty well, right? Which this honestly would not be a bad trade considering we have some highs right here, right? Doesn't really prove much because we did just sell off pretty hard, right? And if you look at the higher time frame, we're still in a bearish leg. We haven't really gone up yet, right? We've sold off 300 points and we're starting to flip. This is where I would consider like a trend starting to shift. I don't even think I would take a trade off this just because we haven't really done anything yet, right? So look at how we're selling off here. I want to see, look at this. Look at the volume, right? Now my bias is like cooked, bro. I have no bias, right? We're selling off more than we're buying up. Selling off, selling up. Terrible candles. We're not getting any volume. And now this is where it gets like very bad. When you see candles that literally have the exact same size, pretty much, like we're literally making bearish candles, we're making bullish candles, and then we're closing like the exact same size bullish candles as well. Bullish and bearish candles, right? They're the exact same size here. That's not really good. We want to see direction here. Now, here is where we're like starting to see a range. We don't really know where we want to go. We have gaps above us, right? So let's go to the hourly, actually. I want to go to the hourly. Right? So let's look at the hourly here, right? If you're trading fair value gaps, it doesn't really matter what you're trading. You'd be trading supply and demand. But for the sake of the video, I'm going to be using fair value gaps. Now, what this basically is showing you, though, is that we have bullish order flow holding us on the higher time frame, and we have this bearish order flow that we put in holding us on the lower time frame. So this is kind of a scenario where we might do this, right? We don't know which gap we want to hold. We don't know if we want to go lower and take these lows. We don't know if we want to go higher and take these highs. This is where you wait for gaps to get invalidated and highs to get closed above. Now, let's actually wait for that to happen so we can see when we get out of this range, right? Again, good volume to the downside, but still in a range. We're not closing above anything, right? 5 minute. We're not closing above anything, right? The only close we got was right here, and maybe this right here. Don't even think I'd count that because we're not respecting any of it. You know, it's not good. Keep playing out some candles, right? We're going lower. We flip to the upside again, staying in this range. Now, we're still holding both gaps. Keep playing out 1 minute candles. This right here is where we're pretty sure that we're going to go lower now. Like you can never be sure in the market. And when I'm reacting to what's given to me, this would be the most ideal time to have a strong bearish bias to lows now. Because what are we doing? Look at the volume of our sell-off candles now compared to the volume of what was holding us up, right? Now, we have closed below some lows on the 5 minute, and we have clear direction where we're going. We're no longer in this range. We actually have targets. We're not holding any gaps below yet. We might get a gap when we get to here, which we might see another accumulation because now we'll have bearish gaps above and bullish gaps below. But now, I'm damn sure we're probably going to go lower here. This is where, you know, you're actually looking to get entries, you know. Right here, actually right here would be your entry. Right? We're actually moving somewhere. We actually have lows. We're actually invalidating gaps. You know, it's cooked RR, but, you know, it's going to play out. Right? Again, 5 minute close below lows. Volume is here. I left my bias untouched because, again, we could reject, but we don't know, right? Now, in what scenario would I have a bullish bias? Let's say instead of flipping to the downside here, let's close this. Instead of flipping to the downside here, we did something like this with volume, right? We have to have a good volume. And then along the way, we do end up retracing and then instantly invalidate it. Now, this would be better because we don't have this hourly gap holding anymore. We actually invalidated that. And there's highs above that we can take with little, like there's pretty much no resistance here, you know? So again, I'm going to give you kind of a list of things to look out for here. So, all right, so here is kind of a general list of rules I'm looking at. So again, right, is the 5 minute closing above highs, very basic stuff. Break a structure, market structure shift. What are we closing above? If we're closing above both, we're closing above highs, then we move down, close above some lows, then we're in a range, bro. We're not moving anywhere, right? And what is the volume of opposing candles, right? I showed you that. We were selling off harder than we were moving up, which showed us that we can possibly actually look for some shorts, even though we kind of were in a higher time frame bullish area, right? So again, that's a reaction to the market, right? I'm reacting to the volume of the candles. I'm reacting to how we disrespected that gap. We're not respecting it on the higher time frame. And, you know, all of that. So that goes right into what I was going to say at the end here, what complements are getting respected. Now, I know you guys have seen that one meme. It's like when the inverse gets inverse and inverse CN. Yeah, you know what I'm talking about. If you trade IFVGs, you know what I'm talking about. But that is a very good example of like when to not trade, right? If we're seeing inverses, get inverse and then inverse again, we're in some chop. Don't trade that shit, bro. Right? You're gonna see it here. We're gonna see it here, right? What do we see? We invalidate this, and then we go down. What do? We invalidate this, and then what do we do here? We move up. We invalidate this, and then what do we do down here? We invalidate these. Like, what are we going to hold? Right? Clearly, it's nothing on the 1 minute, and clearly, we're just bouncing between two higher time frame targets. The buyers and sellers are kind of equal. There's no choice of where we want to go. The volume is pretty much the same, right? We're selling off, and then we're moving up. It's not really showing me anything. So that's another thing. You need to let it stick out to you, right? If the trade does not stick out to you, don't take that shit, bro. Because you're gonna zoom in, right? You're going to have a bullish bias. You're like, okay, we swept the lows. We have nowhere to go. We're reacting out of this gap. We have these nice gaps that are going to hold. And then we get like these 3 bearish candles and we're like, oh my God, long. Oh my God, long. Like this is playing out. This is playing out. Right? Bro, you need to zoom out. You need to watch what we're respecting. And you need to watch the higher time frame closes because you're literally trading like right into another gap. I don't even know, man. Like, you just can't trade this shit. You can't trade this shit. You're going to get stopped out, right? You literally get stopped out. You're trading chop. You're trading higher time frame chop. You're trading lower time frame chop. You're trading nothing. So, pretty much, again, I don't know where my list just went, but so I'm going to add one more thing, and that is to basically react to what the market is showing you. So, again, with what I said about my bias, right? You need to let your bias be kind of pliable, right? Flexible. You need to let it change when it needs to be changed because if you hold a bias when we are clearly not holding that bias anymore, then you're going to get fucked. You're going to get bent over by NQ or whatever you trade, and it's not going to go well for you, bro. You need to react to what the market is showing you, right? Example, right? Let's go to where we actually got out of the range. Let's say you were expecting to be bullish here, right? You were expecting to be bullish. We're reacting out of this gap. This 1 hour is tinier, right? We get this nice flip, right? I guess, right? We can put that in the forced trade list. We got a nice flip. We got a little inverse. We got everything lining up for longs, right? But once we see this sell-off with higher volume, right? We're literally getting higher volume than we're getting to the upside. Straight into the gap, and then we make this one bullish candle, and you're like, oh my, wait, here's our retrace. We're getting that 1 hour tap. We're getting longs. We should hold this gap, right? We should hold this gap. I'm going to put my stop down here because we're going to hold this gap. Brother, we're not holding this gap. We're not holding this gap. You're not reacting to what you're not reacting to what the market's giving you. First of all, it warned you by giving you all this chop. So we're not choosing a direction, right? You're not reacting to this. This reaction isn't anything. You're trying to predict that we hold this area rather than reacting to the sell-off, right? The sell-off was clearly very nice, right? And then this is where problems arise, right? This is where you start forcing shit. Oh, we tap back in the bullish gap. We sweep liquidity. We tap into this unfilled fair value gap right here. Actually, we did fill that shit, but we tap into this fair value gap again. We're not closing below some lows. Oh my God, wait. Oh. And then you enter this. Like we're entering this. I don't even know, bro. You see some crazy shit, bro. You can see some crazy shit. And I'm really expecting none of you to take this, obviously, but very crazy example. But if you still hold a bullish bias, even though we're selling off this hard, you're going to get fucked. Even this, bro. Even this. You see a little flip like this, we make a fair value gap. Oh, we tapped a fair value gap. Wait. We tapped a fair value gap. We're holding this big ass gap, bro. Wait, this is gonna hold. No, you're not reacting to what the market's showing you. We're selling off with volume. We're in a clear downtrend. We're literally out of the thing. This is where shit gets free, bro. Right? Let's say you take this shit, bro. Oh, that's good volume. That's good volume. We're gonna go up here, right? We're in a downtrend now. We're selling off more than we're buying, right? There's literally no proof we're going back up here. We're selling off. We're selling off. Now, we chop again. It's the same shit. What am I reacting to? We're closing above highs. Great. Are we closing above highs in the 5-minute? Fuck no, we aren't. Yo, check the 5-minute, right? Check the 5-minute. Check the high. Did we close above it? No, bro. We didn't. And let's check the sell-off. Completely invalidating the bullish retrace. Now, again, now what do I see, right? We might get lower, but what do? We reach back up with bullish candles that are bigger than the bearish ones. So again, now it's where I drop my bias, bro. This is where I drop my bias. Bias is gone, bro. It's gone. I'm getting rid of my bias here. We literally don't have a direction now. We don't have a direction. This is another range. This is where you get cooked, bro. Now, what are we doing? Like, all right, we get some shit like this. Oh, we're moving up. We're moving up. Bro, we're holding bearish gaps. Look at the 5-minute. What is the volume of the 5-minute candles? Way bigger than this retrace up. We're probably not going to hold this retrace, right? And then look at what the sell-off candle, right? Look at the sell-off candles. When you're really zoomed in, it might look good. But again, this is where you get rid of your bias and react to what you're given. And when you look at all the things we're given here, there's really nothing that pops out as significant for longs here. There's really nothing. And you get a crazy amount of people that actually zoom in this much, and including me. I used to do the same shit. I used to do the exact same shit, right? And think this is good for longs, right? We swept liquidity. It shouldn't go lower. But you're not zooming out. You need to look at what we're respecting. You need to look at the volume. You need to make sure we're actually in a trend, because now that we're in a trend, we get a retrace. We invalidate the retrace. Bro, like, what do? Probably going to go lower, bro. Look at that. The easiest fucking trade of my life, and I didn't even do shit, bro. We're just in a trend. But yeah, that should be it on the video. Hopefully you guys enjoyed, and if you do want to join the Discord, it's going to be in the bio, and we'll be announcing some pretty nice news that literally all of you can take advantage of without a single dollar spent. Announcing that on Friday, so sub to my Instagram if you want to hear about that. But that should be it for the video. Hopefully you are having a good trading year so far, and make sure to sub down below, drop a like, and I appreciate all of you for watching the video to the end. Appreciate you.